Morning, everyone. Thanks for joining us this morning. As everyone else has said, I'm sorry that the slides don't show up terribly well, but I'll try to talk you through things.
You want it like this instead? You want it like this instead?
Oh, that's fine. That's
Okay.
fine. That's great. Thanks, Dave. As Dave mentioned, I'm an international business attorney. I work with many PNDC members and number, a lot of companies that are not within PNDC as well. My practice runs the gamut, but a common thread is high technology, imports and export work, helping companies with all manner of international trade issues and problems and compliance. What I'm going to do today is I'm going to, it's too bad Pat has already left, but I'm going to act as a little bit, he loves me hearing this, I'm going to be a little bit of a counterweight to what Pat has said on the foreign military sales program. And the reason I preface my comments like that is that, frankly, when you listen to Pat and others from DCSA speak about the foreign military sales program, a lot of companies, particularly here in the Northwest, we get scared off a little bit, we get concerned. Am I in the right program? Is this the right conference for me? I don't make $50 million worth of sales annually, let alone in one transaction. Do I really have to worry about congressional approval for my sales, given that maybe my foreign sales are, a couple million. Maybe the foreign military sales are a minuscule part of that. So am I in the right place? Well, you are in the right place. And so what I want to do is reassure you that the foreign military sales program is one that can benefit a small company just as much as it does Lockheed and Boeing. And I actually came from Boeing earlier this week, and certainly they have millions and millions and millions of dollars of foreign military sales every year. We talk about all kinds of procurement and fulfillment practices and how they deal with countries and the ministries of defense in different countries. But frankly, all of those discussions really apply now equally as much to companies that are small members of PNDC. It's not just Boeing and Lockheed that can really benefit. So I'm going to talk today about a very narrow part of international exports. I'm going to talk about the foreign military sales program, but it's really tailored to what you and the people in this room can do effectively. I'm going to talk a little bit also about the regulatory compliance aspects of exports that Pat didn't touch upon, but you'll see how it weaves into a lot of what the foreign military sales program provides. So, and of course, if you have any questions along the way, please do ask. I'd rather have a dialogue if possible. So, that middle point is really what I'm going to really dig down upon. It's the FMS program is really for companies of all sizes, shapes, and products. It's not just for defense articles in the ITAR. It's not just for defense services, also listed in the I've talked to numerous. Whether you're in maintenance, repair, and overhaul, whether you're in selling apparel, footwear, you're not necessarily locked out of foreign military sales. It's not just for F-35s. It's not just for M1A1 tanks. For instance, my first foreign military sales activity was 25 years ago or so, in the precursor to the FMS program. My first contact with foreign military sales was with the U.S. government was interested in offloading a lot of UH-1 Huey helicopters from Vietnam era vintage. They're still military. They still had gun mounts on them. They still had all of the military armor plate that they had bolted onto those old UH-1 Hueys. U.S. government wanted to sell those to foreign buyers. And so that was the sort of precursor to the FMS program. And from there, the program has evolved. A lot of companies will say it evolved over the years, mostly for the benefit of really large OEMs. And that's true until last year in a really marked way. Pat Hawkins touched upon this a little bit. He said that foreign buyers can now designate a sole source supplier as the vendor of choice for a particular product, service, or training. And that's absolutely true. The regulations, the DCSA regulations changed just last year, primarily because of a particular legal case, which I'll talk about. Before we get there, in your materials, I have a few slides worth of timeline and topic. It's a topic chart. It gives the major timeline scheduled decision points for both an FMS sale and for a direct commercial sale. So DCS is direct commercial sales, and it gives some sort of pros and cons of both kinds of sales. Now, what I'm going to talk about today is really how direct commercial sales activities mesh with foreign military sales. In other words, even if the Lockheed is selling an F-35 strike fighter to a foreign buyer, that doesn't mean that a small company in the Northwest, here in Vancouver or in Seattle or in Portland, can't be involved in providing support services, maintenance, repair, and overhaul, training for avionics, and so forth. A lot of us can be involved in that, and that's because of a particular change in the DCSA regulations that happened just last year. So, for instance, a lot of companies look at this particular slide that I put up on the screen, and they say, we don't even we don't even reach $14 million worth of sales annually, let alone any military sales. So does this really apply to me? Well, again, this is for your information, but you don't have to be involved in sales that high. The lower threshold the lower threshold for DCSA sales is $10,000. So if you can devise a foreign sale of more than $10,000, you're eligible for a foreign military sales program sponsored transaction. So we'll move on to why the regulations have changed and why this benefits small companies. So in 2013, a U.S. company, the U.S. government, the U.S. Army, was interested in providing a fiber optic cable telecommunication system for the government of Jordan and their military branches. And it was a fiber optic cable system not unlike what a company might roll out in Portland or in Denver or in San Francisco or anywhere else in the United States. This is basically a lot of construction, a lot of engineering, a lot of training and installation services that many companies in our area, and maybe some here in this room, might even provide. The procurement or the program was requested by the government of Jordan. The U.S. Army put it out as a competitive bid. There are 4 U.S. companies that bid on the program, including the eventual winner of the bid, a company called TCSC. I forget their full name, but it's TCSC, and another company called Hyperion. The bid went to TCSC. It was a small business set aside for a relatively small business. All of the companies were relatively small. They weren't Comcast. They weren't Time Warner. And it was a competitive bid listed as a low price competitive bid. Now, what happened was Hyperion was dissatisfied that they weren't chosen, and so they made an award protest to the Army. Now, as Pat mentioned earlier today, the default procedure for FMS program sales are competitive bids, and it's because of the 1984 Competition in Contracting Act. So we always think, you know, if I'm going to make a foreign military sales, I'm probably going to be subject to competitive bidding. I'm going to be outbid and outgunned by the big boys in whatever industry you're in. And so what's in it for me? I'm a small Northwest business. Well, what's in it for you now is that competitive bidding, although the default procedure doesn't have to apply to your particular procurement. And it's because of this Hyperion case, and it's because of what Pat mentioned, that sole source procurement by a foreign buyer is now not only supported, but as Pat mentioned, the regulations for DCSA have changed to inform their case officers that if a foreign buyer makes a stipulation in writing to the U.S. government, I would like to work with Columbia Helicopters or Ericsson or some other company in this room, they can do that. And DCSA's case officer is obligated to actually give preference to that written request by the foreign buyer. So I just have up there for your information a passage from the actual case where the judge said foreign buyers can avail themselves of what's called the international agreement exception to competitive bidding. That's just a fancy way of saying the foreign bidder says, I want to use company X in the United States rather than the other three bidders, as it was in the Hyperion case. They can do that, and the U.S. government will fulfill that wish. So, what's the implication of that? Now, while you're thinking about that, the implication of that is that now if any of you are interested in getting into foreign military sales, this is the perfect opportunity. Because all it takes is for you to send the appropriate marketing people to cultivate an appropriate sale of your products, services, and other deliverables to a targeted foreign buyer who has a need and is interested in your company. And it's not illegal. It's not that you're somehow doing something under the table because you're targeting a particular foreign buyer. It's fine under the regulations. This case from out of the federal claims court in Washington, D.C. Confirms that U.S. companies can and should actually, in what's called the pre-letter of request period. That's that period before the foreign buyer, as Pat mentioned, actually sends that written request into the U.S. government, to the implementing agency. So no matter what industry you're in, I would highly suggest, and I like to work with companies that are trying to do this because we can really work out the details so that it targets and it benefits your company. Your business people should be talking to foreign buyers, making sure that their procurement specifications are tailored to your company and your company's capabilities, your products, and your expertise. And this is a way that the government is trying to level the playing field so that they're not just selling Boeing aircraft, they're not just selling, General Dynamics tanks, but they're trying to sell more of those products and services for people like you in this room. So all it takes is a willingness and a determination to cultivate foreign buyers in a determined way. Now, Boeing, Lockheed, General Dynamics, they already do that, but you guys can do that as well. And so that's what I'm here to let you know. Yes?
So a lot of our companies are contract manufacturers. Is there a specific approach that they would take because they have capabilities but not a product per se? What would you say is different about that?
Well, certainly, I would admit that when you're a contract manufacturer, you have to think even more carefully about how you can fit into this program. But it's not impossible because services of all types, including manufacturing services, are certainly included in FMS transactions. Now, I'd say what you have to do as a contract manufacturer is determine what capabilities do we have, what kinds of machines, equipment, or expertise in making products do we have that perhaps sets us aside from our competitors. Of course, contract manufacturing is a broad industry, and all of you try to distinguish yourselves from others in the industry by targeting a particular kind of product, whether it's an electronics or the electronics product or a part or component, whatever it is, or the type of material that you mill, or the type of milling products, milling equipment that you use. Whatever it is, try to figure out what distinguishes you from the rest, and then look for a product that is needed by a foreign buyer, and you're just the manufacturer that would make that kind of product, and that there are not that many others that would compete for that. That's the way you want to narrow the type of program that you could support.
So, for example, yesterday I talked to a company that was looking for an ITAR compliant machine shop.
Right.
So that might be, as you said, the typical thing that you might have that distinguishes you.
Right.
That would make you a partner.
Often contract manufacturers say, look, we're a manufacturer, but we don't actually sell or directly export these products. We sell to an OEM in Seattle or in Kansas City or in New York, and they're the ones that export these products. Do I have to be ITAR registered, and does it benefit me? Well, the answer is you don't have to be ITAR registered unless you're dealing in actually manufacturing ITAR products, in which case you should be, and you should be registered. But you can use that as a marketing advantage. You can say, look, in my industry, there are only a few of us that are ITAR registered. That shows that we've committed to doing things the right way and to a level of control and specificity that our competition may not. So I would just say, use it to your advantage. It's not that expensive, and you might be able to get some highly profitable work from that. Yes, sir.
When an end user specifies a sole source through the FMS system, does that then negate the need for them to go out for a bid or do a three-word gather on the bids? Because they said it's highly encouraged to support that. So do they still go through that process, or they say, no, if you only want to work with Coca-Cola, for example, we're not going to talk to Pepsi or RC or anything?
That's right. This is a way that we can level the playing field for smaller companies. You don't have to go through the competitive bidding process. If you have a foreign bidder that says, I would like to work with IND, I don't want to work with other companies, I want to work with IND, and that can allow you to target a procurement just for you. So,
Can I have a follow-on question to that, I guess, as well? So it's at case manager discretion whether they accept that sole source. One of the challenges I know that some of the case managers are having now is just the length of time for the acquisition process. And so if they elect, due to the acquisition process, not to go with the sole source requested company, do they then need to compete or can they assign it to someone else? I know one of the examples I can give is that we ran into this, and the case manager actually selected just to add a claim to a IDIQ contract because it was quicker for them to reach out.
Right. That's a good question. Contracting officers or case officers, as they're called in the FMS program, are always caught between a caseload where they're trying to get through their caseload and they just want to do things fast versus adhering to different qualifications or modifications of standard program transactions. So the answer is it depends on the case manager. The encouraging thing for the sole source procurement regulation change, which only happened last year and it's only been in effect for less than a year, so there's not a lot of precedent so far. But the encouraging thing is that it's actually written into the regulations, and you can see it in Chapter 6 of the DCSA manual, that it instructs case managers to give preference to the wishes of the foreign buyer. So most case managers take that to heart and say, not only because of the manual, but because of this federal case. And of course, no agency wants to be hauled into court and lose. Now that we have this case out, all of us in private practice will immediately go to that case and say, if you as a case manager refuse to agree to this sole source request from the country of X, what justification do you have that would overrule federal law? And so in most cases, the agency never wants to go there. Any other questions? Okay. So this Hyperion case is a really hallmark case for those of us practicing in government contracts and foreign exports. As I mentioned, it allows you to compete with the big boys, but for the rest of my presentation, I want to remind you that even though you're able to go sole source and have a buyer designate you as the preferred vendor, really the stipulated vendor for a particular product or service, you still have to be mindful of general regulatory compliance for international export transactions. I'm only going to talk about two, but there are several areas of compliance that you might need to be aware of. As always, as a general matter, you can't lie in applications. You can't even fib. By fib, I mean is you can't omit information that is material to the transaction. So you can't send in applications generally that only tells the government what you think that they want to hear and not everything about the transaction. Yes, sir.
Before you move on, are we, as minor players in this grand scheme of things, are we still looking to each individual SCO to direct us to the best place to market if we wanted to go after some of those sole source opportunities?
That's a good question. So what he's referring to as an SCO is a security cooperation officer. In every embassy around the world and in many consulates, there is a U.S. government security cooperation officer. The security cooperation officer is sometimes the charge d'affaires, sometimes a member of the military, but in any case, their role is to help U.S. Industry identify an authority within the foreign government that actually has the authority to say yes. So you don't want to be spending your time spinning your wheels by speaking to government representatives who may not have the authority to actually say yes to your particular sales transaction. And security cooperation officers can help you identify who's the right person within the foreign government to deal with. A lot of companies, I've dealt with a number of them, who say, I don't want to deal with the U.S. government. I don't want to have anything to do with the U.S. government. It's only going to get me in trouble. I don't want them to know what I'm doing. Well, in this case, the SCOs can really be helpful because they're generally supportive of what you're trying to do and supportive of the foreign buyers buying from U.S. companies, not from your foreign competitors. So I'd say yes.
Quick follow-up question,
Yeah.
sorry. And you might be getting into this. Are we required to follow the FAR in terms of marketing to those foreign representatives as well, or will the SCO inform us of some sort of acquisition regulation or lack thereof that we need to comply with?
Yeah, no, that's a good question. I didn't put, did I put that? No, I did put up the federal acquisition regulations. The federal, in this case, the defense federal acquisition regulations, the defense version of the federal acquisition regulations will apply to FMS sales. Now, they will apply to your companies because you will have, and I have a copy of one that I've worked on in other matters. I can't share it without redacting some information, but I have, there is a contract called a certification and agreement that you will enter into with DCSA. as a part of your involvement in the foreign military sales program. And they're not long agreements, but what they do is they also bring into play the federal acquisition regulations, and there are some flow downs in the agreement that you will have with the implementing agency and DCSA. Things such as, and I'll go into it since you brought up the issue, you'll need to open your books to the federal government. They don't usually actually invoke this right. But this agreement will say, as part of this FMS transaction and selling your product to a foreign buyer that we want to support, you'll have to open your books and make sure that we can come in at any time within 3 years after the transaction and look to see that the monies have been used for this program and not for some other use. You'll have to disclose to us what your bank accounts are, whether they're in the U.S. or overseas. Again, Pat mentioned that if your sale is funded by foreign military financing from the federal government will want to know that their money went toward procuring your product or your service, not to your vacation or your friend's vacation. So again, these are provisions that are typically not invoked by the federal government. They don't have the time or resources to check on everybody's bank account. But they have it in the agreements because they want to make sure that there's the threat of their being able to do that if they think there's wrongdoing that's occurring as part of the FMS transaction. Yes, sir.
Are you referring to the certified cost accounting standards, and is that required to have that system in place, or you just have to have the records available?
That's a great question. That gets way down into the weeds, but the DCAA, the Defense Contracting Audit Agency, is the branch of the federal government that will actually audit that will make sure that this contract is performed properly. They will require that you have cost accounting programs in place to their spec, but they will probably not, for a provision like this, they will probably not really actually ask for that information. But if they do, you would certainly probably want to just send a summary and then follow up with more detail if they ask for it. But typically, my advice usually is give what's minimally requested. If the government really wants more, they can get into it. But obviously, you want to just minimally comply, sure, as best you can. So I'm going to mostly talk about a couple things to be aware of that get companies in trouble. The Foreign Corrupt Practices Act compliance and U.S. export controls. Now, if any of you know, those two topics can be the topics of multiple day seminars in and of their own right. I'm going to cover a couple things about them in about 7 minutes. So bear with me if this is not exactly the whole textbook. So particularly if you're sending your representatives or going yourself to talk to foreign buyers, to try to promote a sole source designation for a procurement from the foreign buyer and a sale from yourselves, you want to make sure that you're doing the sales and promotion activities properly and in accordance with the U.S. anti-bribery laws, which are principally the Foreign Corrupt Practices Act. There are two, as you may already know as well, there are two aspects of the FCPA. One major aspect of it applies to public companies. These are called the record keeping and internal controls provisions of the FCPA. Now that applies principally to public companies, but it doesn't mean that you as a private small company don't have to have appropriate internal controls and appropriate record keeping as well. But there are particular stringent requirements that apply to public companies. What does apply to companies of all sizes and down to individual U.S. citizens is the anti-bribery prohibitions. Basically, you can't bribe somebody. And so we'll go into what that means. I'm going to talk about the FCPA I'm just going to talk about the basic definition of what the anti-bribery prohibition covers. So it's unlawful to make an offer. It's unlawful to make a payment, to give somebody something of value. But because it says something of value, it doesn't have to be just cash. It could be something of value. So something of value could be a ticket for their whole family to go to Disney World. It doesn't have to be $10,000 in cash. It can be something else of value. You don't even have to give something of value. You can make an offer to give something of value. Yes, ma'am.
Can't offsets be considered bribery?
Not if they're appropriately documented, right? We'll talk a little bit more about what it takes to violate the FCPA, but you have to have an improper motive. So an offset may be a quid pro quo. It may be the foreign buyer saying, I want to buy a U.S. weapons system, but as part of that transaction, I want you, company X, to also provide training and maintenance and other support services for the major equipment purchase that we want to make. That's by no means improper or a violation of the FCPA. It just means that the foreign buyer wants something along with the major system that they're buying, and they want to get something else besides what the principal transaction is about. That offer, that payment of something of value, or the offer of something of value, has to have a corrupt motive, and we'll talk about that some more. And it has to be, and you have to have some knowledge or reason to believe that improper payment is going to a foreign government official. Now that's a loaded term as well, because foreign government official is not just simply an actual government official. It could be a consultant working for their government. It could be a member of the royal family. There are many circumstances where the definition of what is a government official can be broadened to cover other people that you might not initially think this is a government official. So I caution you all, since I don't have time to really go into it, I caution you all to make sure that when your salespeople or yourselves are talking to foreign buyers and representatives of foreign buyers, that you make sure that you be mindful that making an offer or actually making a payment of something of value with the intent to influence their decision to buy from you improperly, and that knowing or suspecting that payment or offer of something of value will go to a government official, that should raise a red flag. So you should be asking somebody you should run that up the flag within your company. You should look to outside consultants or attorneys or other authorities to try to determine am I doing something proper, or am I crossing over the line? Now the purpose of that offer of something of value, or that item of value, is to influence a decision by someone, and you're influencing a decision made by a foreign government official so that you can secure an advantage, such as an award of a contract, for instance, or the sale or the purchase of an FMS piece of equipment or service, as we're talking about. So people often bring up, well, aren't there exceptions to the Foreign Corrupt Practices Act, and aren't there multiple ways that we can get around this? There are exceptions to the Foreign Corrupt Practices Act. You've probably heard of what's called an affirmative defense, or by means of what some people call grease payments or facilitation payments. Well, all I'll say on that point is that, yes, there are exceptions to the Foreign Corrupt Practices Act. It's difficult for attorneys to figure out whether, under the circumstances, a particular a particular act or activity comes under the category of a facilitation payment and not a bribe. So I would just caution you that if you're sending your sales representatives or you yourselves are talking to government officials and they're asking for you to do something to help them out, that you, again, the red flag should go off and then you should be thinking, well, maybe I need to talk to somebody else about this before I say yes. But certainly, there are exceptions. Yes, sir.
So if you take this concept of anti-bribery back into the United States government, you can't buy an official of the government a donut. Considered to be influencing the decision. Where does that line? Is that the line the same as strict? You can't go buy your friend a cup of coffee over there, or
you know, it's a great question, and really the answer is going to be very unsatisfying. It's difficult to determine, really, and it's always fact-driven as to whether a particular act or gift is just an incidental gift, or whether it crosses the line of being a bribe. It's not so much the value of the, if it's $5, probably you're not going to get into trouble for that. If you buy somebody flowers or you give somebody a small gift, these are typical in business. But you have to, it has to pass the lab test. If you think that this might be something that crosses the line and that it might be improper, well, you should check that with somebody else. And so it's hard for me to say if it's bigger than if it's big enough to be a problem or if it's small enough to be okay. It really depends on the circumstances. What I will say though is, if you are doing something to obtain something to which you are already entitled, it's less likely to be a bribe than if you're doing something to influence somebody to get something to which you're not yet already entitled. Let me give you a classic example. People often ask, well, I have product caught in customs in country X. I need to pay $20 to this guy, this clerk at the desk in customs in country X to get the import permit so I can get this thing through customs. Now the question is, are you giving $20 to influence that customs officer to issue the permit, or are you giving $20 to facilitate getting that permit that's already been approved, getting it today versus next week? Now, this is sort of a made up example, but you see the point that I'm trying to get to. If you're giving somebody something in order to influence the decision, that may be bad. If you're giving somebody something to just facilitate that the thing you're looking for gets to you today as opposed to tomorrow, that might be okay. But I say might or maybe because, again, it's always going to be fact-driven. If it's $20, it might not be a problem. If you're giving somebody $1,000, it might be a problem. If you're giving somebody $10,000, is that definitely a problem? Again, it depends on the circumstances. But that's a good question. So I'm actually going to move away from the Foreign Corrupt Practices Act because I'm already over past my time. And Dave's going to give me the hook here in a second. The Foreign Corrupt Practices Act, we talked about off and on during, Pat's talk as well as Joe's and so forth. The consequences under the Export Administration regulations are huge. The EAR governs exports of commercial products, many of the products that you might export here in this room. But still, the consequences are huge. The consequences are even worse under the ITAR. So you want to make sure that you don't fall afoul of either set of regulations, because they're what I call bet the farm kinds of liabilities. You don't want to put your company in jeopardy, and you don't want to put yourselves in jeopardy of prison time and being out of a job and so forth by doing the wrong thing. In your program materials, I have a few slides with regard to effective elements of an export controls compliance program. I've gone over my time already, so I'm not actually going to go through what might be effective elements of compliance program other than to say, for both FCPA and export controls, you want to have a compliance program so that you're not relying on each individual employee to decide for themselves, am I doing the right thing or am I not doing the right thing, depending on whether it's anti-bribery or export controls compliance. So you want to make sure that you have a program that is written, that is for which your employees are reminded through training, and for which you have policies and procedures that are not just in a book somewhere. So if your compliance programs sit on a shelf and nobody ever refers to it, it's not a compliance program. And I know if any of you have heard me speak before, I say that a lot. But it's really, really true. You can't hear it enough. If your people think that compliance means that you go to a training once a year, or that you go to a seminar once a year and that's all you have to do for compliance, then they don't understand compliance. Compliance means that you have absorbed into your being a way of looking at how you do business, so that you're not just referring to a manual, but you're actually looking at risk in everything you do, and how do you mitigate risk, not only for your company, but also for yourselves. Record keeping is certainly a part of compliance programs, but it's not the only part. And why do you keep records? You don't keep records just to fulfill something for your job description and put it into a book somewhere. For export controls and anti-bribery purposes, record keeping is important because you can then prove that you not only have a policy, but that you followed it and that it's been done. And there's a reason why it was done or not done. So that's what your compliance program should capture. It should capture why your company has done something or not done something. Who did it? Who didn't do it? What date was it done? What date was it not done? What's the disposition of it? And is it still an open matter? So if your program doesn't capture that information in some way, electronically, in hard copy, then we should talk. Because if you're thinking about entering into foreign military sales, your compliance program should definitely be robust enough so that you can sustain an audit, either from the Defense Contracting Audit Agency or from DCSA directly, or from any of the export controls compliance agencies, at BIS for commercial products, at DDTC for military products. So there are a lot of different agencies and eyes that can be upon you if you enter into foreign military sales. But again, I don't want to talk about all these regulatory requirements to scare you off. I actually want to assure you that foreign military sales can be a very lucrative and helpful aspect to your business expansion. So I certainly wish you tremendous success in that. And all this information is in support of considerations for export controls compliance. But I want to end by saying that, you know, an ounce of prevention is worth a pound of cure. And so I hope that some of these comments have been helpful for you today. So thanks for your attention. Yeah. A question or two, since I know I've already run over my time, but I thought I'd extend it anyway. Any questions or comments? Thanks again. If I can ever help you in the future, please call.